Self-employed mortgages. In this video, I'm going to tell you what you need to know. My name's Dan and I'm a qualified mortgage and protection advisor. This video does not constitute as advice, it's purely for educational purposes only, and I must make you aware that your home may be repossessed if you don't keep up with the repayments on your mortgage. With that out of the way, on with the video. I just wanted to make a quick video because I am also self-employed. So I wanted to cover off a few points and also explain I feel your pain. I also want to squash a myth that self-employed mortgages compared to employed mortgages are more expensive. That's simply not true, okay? Now, I've been there, we have all been there. If you're self-employed, it's impossible not to be there. You're going to have a bad financial year or maybe a couple of years. You know, your computer equipment's broken, you need a new van because it's broken down, you need a new set of tools. These things can be expensive and they obviously need to be replaced to keep operating as a business. But fortunately, there are lenders out there that understand this and they will help you get a mortgage, keeping these sort of things in mind. At the end of the day, they're human and they have empathy, so lenders will work with you to try and get you the mortgage that you want, to buy that new dream home of yours, or just to simply remortgage onto a lower rate or raise some money for whatever purpose that you require. Now don't get me wrong, having a bad financial year, it can make your application perhaps a little bit more tricky. You know, I don't need to tell you this, but being self-employed, your income, it can go up and it can go down, whereas employed people, they tend to have a steady amount of income. If they stay with the same employer, you know, hardly anyone these days gets a pay cut. To be fair, hardly anyone these days kind of gets a pay rise, but the point I'm trying to make is it's consistent if you're employed, whereas self-employed, your income can fluctuate. Now, lenders, they build this in, they keep this in mind, and that's why there are some lenders out there that will look at just your latest year's accounts. There are other lenders that will average your 2 or 3 years. So what lender a mortgage professional would place you with really does depend on your last 2 or 3 years history. Now, if you're watching this video and you've recently become self-employed and you've not even got 1 year's accounts yet, currently at time of recording there is a lender that doesn't even need you to have 1 year's account. You simply get an accountant's reference, they'll project your income, they'll also ask, the lender will ask to see however many bank statements you've actively been trading for. I'm not going to lie, that application is going to be a little bit more tricky to get through than someone who's, say, self-employed for 3 years, because there's a bit more of a history for the lender to go by. So they're just effectively going to take a view on it. Something else that tends to happen for a lot of self-employed people who own limited companies, you don't effectively take out every single bit of profit the company has made. I've done it in the past. I have only taken out enough income to live. I didn't need to take every single penny out. Now that can go against you, because if lenders are looking at just your personal income, what you've drawn for the last 2 or 3 years, you may not have drawn out as much as you could have drawn out. So there are lenders out there that will look at retained profit within your business as well. So you can actually use that income to help your chances with a mortgage application. But I'm not a tax advisor, I'm not your accountant. You need to actually speak to a tax advisor or an accountant before you do that. You'd also need to speak to a mortgage professional. Between those different professionals within those industries, they would work out what is the best solution for you to put in a successful mortgage application. So what do you need to do? Well, research. Or if that is a little bit overwhelming, speak to a mortgage professional. To be honest, that would be my advice. They are looking at lenders' criteria every day, so they're going to know it a lot better than you. They're not going to be better than your industry, so it works the other way around. You wouldn't be better than them within their industry, so they are really the people that you need to speak to. You're going to need 5 things. You're going to need tax computations. They're also known as SA302s. If you don't know what they are, you can get those off your accountant or ring the Inland Revenue, HMRC. You need up to about 3 years. If you've not been trading 3 years, you need 1 year, 2 years, however many years that you've been trading. But if you've been trading for 3 or more years, you're going to need the last 3. That will better your chances of a successful mortgage application because you'll have more lenders to choose from within the market. You're also going to need 3 years accounts. Same rule applies. If you've not been trading 3 years, you obviously can't produce 3 years accounts. But as I was saying earlier, you can look at retained profit. So if you can provide 3 years accounts, that's also better. You're going to need your passport. You're also going to need bank statements. Now, some lenders will ask for 3 months bank statements, but they could ask for 6 to 12 months. So just be prepared. And you're going to also need a council tax bill. If you haven't got a council tax bill, then a utility bill dated within the last 3 months. Going back to one of the points I was saying earlier about talking to a professional, you want your mortgage application to be accepted first time. And with a mortgage professional, they should be able to do this. As long as you provide those 5 documents to them, you're going to need others, don't get me wrong. They're going to be the 5 main documents you need for a mortgage advisor to establish which lender is best suited for your circumstances. And when that mortgage advisor submits your application, or even if you do it yourself, you're going to want all of the documentation ready to put in front of the lender's underwriter. If I just quickly paint a scenario, if the underwriter at the lender's got 2 mortgage applications on their desk, which one do you think they're going to work the quickest? The one that's got all of the documents there, or the one where there's half a file and they don't know whether or not they can lend and they're going to have to just ask for further information? And that's where a mortgage advisor comes into their own, really. They know what documents are going to be required. They're already 2 or 3 steps ahead. So they'll put that application on the lender's desk fully packaged, and it should go through very quickly depending on the lender's current turnaround. Please put in the comments below, are you a limited company, sole trader, or in a partnership? I'd be really interested to hear what your setup is, and have you ever had any bad experiences applying for a self-employed mortgage? Like I say, please put in the comments below. I'd be really interested to hear from you. If you want to watch a video on how parents can help you get on the property ladder, please watch this video. And if you want to watch a video on my opinions of why I don't like the Help to Buy scheme, please watch this video. And also don't forget to subscribe, and there's a bell icon that you can click on and it will notify you of any future videos that I release.